Subscribe to our YouTube channel for in-depth interviews of India Inc. and press the bell icon so that you do not miss our updates.
Hello and welcome to Nirmal Bank, ladies and gentlemen. I'm Daria. We have with us Riya Singh, technical analyst, currencies, joining in. Riya, welcome to the show. Riya, my first question coming to you is with regards to where the rupee is concerned. That has been under pressure, and that's taking into consideration the US bond yields. What is the sense that you pick up on that front?
Yes, as the world's biggest bond market, indicated that the growth and inflation are moving higher. The rise in the bond market indicated the same thing, that there was a heavy sell-off in the bond market, which shooted up the yields overnight. Now, what has this done for the riskier asset is a lot of outflows has happened for the riskier asset, and rupee was not spared from it too. Because if you have seen the kind of market crash that had happened, the capital market closed around 600 points down, and the same on the same day, the rupee moved, tremendously towards the depreciation phase. So this indicated a lot of FIIs had pulled out the money from the market. Now, what this whole situation has put forth for the for the Indian rupee and the central bank is the kind of forex inflows exposure that the capital markets have right now. Because any of such riskier situation and even uh, uh, creates a very rapid devastation on the whole currency stabilization, as well as on the financial situation for the country itself. So there might be some solution that can come forward from the central bank, whether it's issuing its own bonds, though according to the regulations they can't. But the only situation where it can be handled is uh, the downpour of foreign money and the exposure of the foreign money that the stocks have, which threatens the whole financial stability, as well as whether the currency situation, how they could tackle with it in the coming days. The other depreciation factor that worked, for the rupee was the report that the central bank released, where it has stated and recommended that further strengthening of the foreign exchange reserve is needed. And this will definitely put a pressure on the rupee, because if you look at the whole forex reserve, it is already close to 600 billion dollars, which is exceeding the standard matrix requirement. And the only positive thing that we can draw from it, whether or consider it as a silver lining for the country, the economy, and the rupee, is if the central bank comes out and uses this extensively pent up forex reserve that it has right now, to in order to aid into the rupee appreciation, at least to a certain level where it won't put a dent on the the imports, the oil imports, the precious oil imports that will be coming in for the country, and which will further add into the depreciation. So the central bank will play a major and vital role in the coming days as to how it will handle these situations, and how it will lay down its ground work in order to not let such type of situation drastically impact the forex stabilization altogether. So I think in the coming days there could be some appreciation that can happen for the rupee, though it will remain in a very minor phase, and it will be a very small, like 20 to 25 paisa for the shorter term. That kind of appreciation you can see in the rupee, because dollar index is still at its bullish leg. So there is a lot of effort that will be needed in order to get the rupee back to its level of 71.50 and so forth.
Right. So with this, Riya, if you see in terms of the dollar index as well, it's risen post the 90 levels. What is this indicating, and are we expecting this kind of directional trend to continue?
Uh, well, dollar gained its bullish leg from the central bank's commitment first, where it has maintained its accommodative monetary policy stand, and added on that the US still has a long way from full recovery. This does add onto the risk sentiment into the into the whole market itself, plus the ultra easy monetary policy that has been given to the financial market is flooding the US economy with the cheap money, which will, further aid into the inflation and so forth. And plus, if you look at the US economic news, they have been strong, and there is an open pledge from the ECB that they'll be keeping an ultra monetary policy in the coming days due to the downside effect that the Europe zone is facing. So this will further strengthen the bullish leg with the euro crash, with the euro coming or weakening against the dollar in the coming days. So if you look at the overall factors, I think dollar will likely enjoy the green zone owing to the risk on sentiment that is there into the economy. There are some back burner issues such as the Biden administration with the US-China trade conflict and how the government will tackle the speculation, the tapering to speculation, and work to show a better economic recovery numbers. But I think given the situation, there can be a continued bullish leg on the dollar index from here on.
Right. With this, if you see pound and euro as well, Riya, they've lost their gains. What are you expecting, and what's the performance looking like from here on?
The euro will be on a weaker note owing to the ultra easing policy that the ECB has come forward with, plus with the further guidelines as to how the ECB will tackle such bond yield situation coming in the coming days. So this will kind of put a pressure on the euro in the coming days. As far as pound is concerned, I think a long-awaited profit taking was necessary for the pound as well, because it was kind of tapering into the whole export situation for the economy. And plus, if you look at the certain events that are coming up, there is a budget speech that will be coming up for the country. And like India, the budget this year is very crucial for any economy. And there are quite of expectations from the UK budget as well, taking into consideration the kind of steep uh, path that it went, shrinking almost by 9.9%, and the unemployment rate shooting up to 5.1%. So obviously, the budget speech will lay the groundwork as to what are the next phase of plans that the government will be delivering pertaining to the whole economy recovery, and plus how much further support that the economy will be given to. Then there is another factor with respect to the inflation. Obviously, if you look at the amount of savings and the pent-up demand that the country has built up, once the blueprint of the prime minister comes into action, where he has indicated that there will be a complete elimination of the lockdown measures, there will be quite a demand outflow that can happen into the economy, and the inflation can shoot up beyond the targeted level. So this is another situation that the country has to tackle up with. So pound will remain under pressure at least on the short term, and it could retrace back some of its gains against the dollar in the coming session due to the kind of uncertainty factor that it has surrounded with right now.
Right. So with this, what are the kind of strategies you would recommend?
You can go short into the rupee. Look for a breakdown of 73.58 for the target of 73.30, 73.10. Keep a very strict SL at 73.75. go short into the JPV INR as well. Look for a breakdown of 102.12 for a target of 101.95, 101.75 with stop loss at 102.30. You can buy into the Euro INR above 88.62 for the target at 88.80, 88.90 with stop loss at 88.48. Follow strict SL in all these three strategies owing to the uncertainty factors that the forex market, is surrounded with. Uh, uh, so these are the three strategies that you can look into.
All right. Thanks a lot, Riya, for getting us the strategies and the understanding. And thank you, participants, for joining in.